Welcome to the Capital News. I am your host, Alex Kreitis. Today is August 2nd, 2019. Thank you so much for joining me. So we're going to talk further about what has been taking place in global stock markets and really just all global financial markets this week, because we had U.S. stock market really experience the worst week of 2019, especially in regards to the S&P 500 and the NASDAQ. And a couple political stories that we're going to touch on first before we get into the financial and economic news. We were talking earlier this week about how Director of National Intelligence, Dan Coats, is resigning his post, and how Donald Trump was going to nominate, and actually he did nominate, Republican Representative John Ratcliffe, a former prosecutor, to the position. A lot of people immediately, especially the anti-Trumpers and a lot of Democrats, were very much against this nomination. It was viewed, and perhaps rightly so, as a safe play for Donald Trump because Representative John Ratcliffe has been a very loyal supporter of the president, especially in regards to the Bob Mueller investigation, the whole Trump-Russia collusion conspiracy story, very much in President Donald Trump's corner. The president values loyalty. Perhaps he values loyalty above all else. Again, that's not something that I think is very, I don't think it's a strong characteristic for a president or a leader to value loyalty above a whole bunch of other things. But I do happen to believe that's the case with this president, unfortunately. That doesn't mean that the president lacks a whole bunch of other skill sets, because I believe he does have quite a few valuable skill sets to do the job effectively, although he's not doing it up to the standard I was hoping that he would. And I have a lot of issues with how he's implementing a lot of policies and a lot of the policies that he has decided to engage in. So if you're a follower of this podcast, you know I call it as I see it. So Representative John Ratcliffe, this was a contentious nomination. The arrows were already being flung at this man. And now we have the news today that he is withdrawing his nomination, or Donald Trump withdrew the nomination. However you want to say it, makes no difference, because John Ratcliffe is now no longer going to be nominated for the position of Director of National Intelligence. The excuse that we are being given is, well, this was going to be a very contentious nomination process. It was going to basically be something like Justice Kavanaugh's hearing, that just, the Democrats don't want him in there. This is a political appointment. This is supposed to be nonpartisan. It's supposed to be somebody who's putting national security above politics. We can't have this guy in there because he's been supporting and defending this president throughout the entirety of the Mueller investigation. This is strictly politics, and we cannot have that in this position. Now, that's warranted, in my opinion, to make that argument. But nevertheless, somebody with, as Donald Trump is, he loves the fight. He loves the debate. So the fact that he actually pretty much came out and said, this would be a horrible experience for the congressman and for his family, so it's best to withdraw. Okay, so is there more behind the scenes? We don't know. Maybe they did a little bit more digging into Representative John Ratcliffe, and they were doing damage control before it really became serious damage. Who knows? But nevertheless, he is gone. He is no longer the nominee for DNI. At this time, I do not believe the president has nominated anybody else, so we'll have to see what comes of it. But this is a very important position within the government. Again, there are critics who say it's just another layer of bureaucracy. It just slows things down. I'm sure those arguments are warranted. But nevertheless, this is a very powerful position, and I imagine the president will nominate somebody here very shortly. Across the pond with some Brexit news, we have the British Parliament is now pretty much split between the Conservative Party and pro-EU European Union advocates. So this is the never-ending story. This is the story, the saga, the drama that never ends. We have the new British Prime Minister Boris Johnson in there, sort of Trump-esque on the British side of things, if you will. It's going to be very difficult now. It wasn't going to be a cakewalk to begin with. But now you have a very split parliament by the numbers now, not just in ideology, not just in voices screaming at the top of their lungs, but you actually have it now in numbers, that it is split rather evenly between the Conservative Party and pro-EU parties. So you have to remember, folks, at the end of October, trick-or-treat Halloween Day is the deadline, the second hard deadline for Brexit. Deal or no deal. Deal or no deal. Now, I don't know how serious this deadline is going to be because they blew past the first one, which was already back in March, if you can believe it. The end of March, here we are sitting in August. Are they anywhere closer to a deal with the European Union? No, not at all. The European Union wants to play hardball. They said, no, we struck a deal with former Prime Minister Theresa May. You guys didn't pass it. You voted for it 3 or 4 times. You're done. We're done talking. We're done negotiating. That's it. You either sign this or we'll see you later. Now, you have this split parliament. What are they going to vote on? What are they going to call for votes? Are they somehow going to maneuver to get a second referendum put before the British people? I certainly hope not. I certainly hope not, because the British people, the British government is supposed to be one that adheres to, believes in, and practices democratic values, principles, actions. They engaged in such an action in 2016 already. So now we're well past 3 years. It was June of 2016. We're now past 3 years. They're still in the EU. This, as far as I'm concerned, is a disgrace. And you have very powerful politicians in British Parliament who are calling for a second referendum. What an insult. You didn't vote the way we wanted you to. Now go back and vote until you vote the way we want you to. What an insult. They haven't even left. It's the anticipation of it. Everybody is so scared and nervous and anxious as to what's going to happen. It's the anticipation that has everybody caught up in this mess. You're the British people. You've been around for quite a while. The sun never set on the British Empire. I think you can get through this. You got through World War I, you got through World War II, a whole host of other domestic issues. I think you can get through this as well. I really do. And you'll be better off on the other side because now you're going to have more control over your government, over your policies. You are truly going to have your sovereignty back. You're not going to hand it over to a bunch of bureaucratic idiots in Brussels who you don't know, who you don't vote for. Because that's what it is. You send millions, if not billions, of British pounds to Brussels to have laws placed on you, and you have no true representation. I mean, this is a no-brainer. You're brainwashed. Something's amiss. I understand sort of the traveling and the back and forth and some of the trade aspects of it, but that's what a deal would have been struck for. I mean, that's what Theresa May should have worked for. I think she pretty much failed at it. But on the other side, the EU didn't want them to leave. And if they did leave, they wanted it to be as painful as possible because they love the bureaucrats, the powers that be, love the system. They love the fancy cars that they get to drive around in, the planes they get to fly around in, the big money they're making. They love it. So they're going to fight to keep it. And they're going to make an example out of the British people. If they have to say, look, you Italians, you Greeks, you Spanish, if you think about leaving, this is what's going to happen to you. It's not going to be pretty. It's going to be a long, drawn-out process. It's going to be very timely, very expensive. The uncertainty is just going to cause chaos in the marketplace. It's not going to be a good thing. You better not be rising up there on a populist movement. Better not think about leaving. So that's where we are. For the sake of democracy, the British people better leave on October 31st, if not sooner. Deal or no deal. Otherwise, it's going to be incumbent upon them to revolt. And I mean that seriously. Peacefully, but they're going to have to do it. Because that is such an insult to the people who voted. It's ridiculous. So that's the political news on the domestic front and across the pond, because I know we haven't talked about Brexit here in a while. But believe me, folks, it's coming around full circle. It'll be back prime time. Believe me when I tell you. So a handful of other things we're going to talk about today. The jobs report, those numbers came out. Donald Trump, the President of the United States, along with some counterparts in the EU, struck a trade deal. This is very minor. This has to do with beef and ranchers and that type of thing. Big deal for them. Of course, I'm not diminishing them, but nothing fantastic here for the broader economy. But nevertheless, so we're going to talk about that briefly. We have the trade tension between South Korea and Japan. Remember, we talked about this a week or two ago, because these two still have a grudge from 70 years ago plus on. And now they are sort of escalating within their own little trade battle. So we have to monitor that. We're going to talk about that briefly. China is expected to retaliate against Tariff Man's threat and supposed tariff increase that is set to take place on September 1st. So that is a whole month away. We will see if the president does take action on that. I imagine he will. And let's see. We're going to get straight to the other news of the day. So the S&P lost 21.5 points, down 0.7%. The Dow lost 98.5. The Nasdaq was down 107 points, representing a decline of 1.3%. The Russell 2000, the small cap index, lost 17 points, down another 1%. The Dow Jones Transports and the New York Stock Exchange were both down 0.6% for the day. Oil, despite being down about 8% yesterday, at its lows, rebounded a little bit. We have WTI at $55 and change a barrel, and we have Brent at $61 and change per barrel. Gold is relatively flat, pulled back a little bit, is now at $1,452 an ounce. Silver is at $16.23 an ounce. I still believe both of these precious metals are undervalued. I believe once everybody becomes aware of what is taking place with all of these central banks, they are going to understand that gold and silver can act as money. They can act as a store of value. They can serve as a hedge against inflation and uncertainty. So I believe these remain undervalued. I believe we could be in the midst of a bull market. We're going to have to see if gold can really penetrate $1,450, stay above it. If it can, with conviction, I think you're probably off to the races to $1,500, and then we'll see what happens there. Silver is definitely undervalued. I own it. I believe in it. It's part of diversification. Do your research. Do your own homework. But I tell you guys, look, I'm not here to give you financial advice, but I do tell you what I do and what I would do. Uncle Sam's 10-year Treasury was down another 2% and is now yielding 1.86%. 1.86%. So this is anticipating that interest rates are going to go lower, that the Federal Reserve is going to come to the rescue once again. This is a continuation. We have most of the rest of the developed world with negative yielding debt at the government level, at the corporate level, even at the junk bond level. This is the distortions that are created by funny money, by a bunch of idiots that we call central bankers who think they know best. This is what we get. You have to pay the government for the privilege to lend them your money. Makes no sense whatsoever, but that's the world we live in. Can't make it up. The VIX, the volatility index, was relatively flat and is still at $17.61. A couple other things we're going to talk about here before we get to the jobs number. Just to call this out, because we did talk about natural gas the other day, because it did suffer a big drop-off after quite the rally, and that rally was predicated off of the extreme heat that was experienced here in the United States. Of course, it was pretty much global. Europe was in a bit of a heat wave as well. But primarily here in the U.S., you had a big rally in natural gas only to be counter-trended very quickly, and that trend to the downside has continued, and natural gas has lost an additional 3% today, hitting 2016 lows. So, I should say, getting back to 2016 numbers. This, again, the reason I'm calling this out is because while lower prices might be good for the consumer, they're not great for the producer. And when you look at the producers, when you look at a lot of these oil and gas companies, and you understand that a lot of these companies are financed through junk bonds, and some of them may be rated even triple B. Now, that's not junk. That's one grade ahead. That's one level ahead of being junk status or below investment grade. So even if you were to say you have some of these oil and gas companies with triple B paper, if they have lower prices for their commodity and they got a lot of debt that they have to pay, You get the picture here. You get why margins are going to get squeezed. They are getting squeezed. You see why you can have some bankruptcies start to transpire rather quickly. So if these prices continue to go down, and a lot of this is now obviously off of the back of the markets finally coming to realize that the global economy is slowing down, that the Federal Reserve with a 25 basis point cut isn't going to do anything. It was already been priced in. You've had interest rates coming down for months in anticipation. You've had stock markets rallying for months in anticipation of this. You get it. They stopped the quantitative tightening, and lo and behold, we've had a sell-off this week, the worst of 2019, reminiscent of what we experienced at the latter half, really in December of 2018. So that's not good news. Will it continue? We're going to have that discussion. But that's natural gas, because you have to understand the dominoes that are in place. You have heavily indebted companies. You now have them getting a lower price for their commodity. They still have an immense amount of debt that they have to service. What are they going to do? Are they going to lay people off so they can have the cash flow to pay the debt while in the hopes that the price turns around? I think they're going to be hoping for quite a while, to be honest with you. We also have copper, which also experienced a minor rally over the past couple of weeks that we were noting here on the podcast, and that has reversed over the course of this week as well. Copper was down nearly 4% just today. And that is hitting levels not seen since early 2019, late 2018. And if you look at copper as a leading indicator for global equities, that's not pretty. That's not good news, is it? Around the world we go, because there was some big movements in the markets today. The British markets were down 2.5%. The German markets were down 2.8%. The French market lost 3.33%. Yes, 3.33% on the French markets today. The Italians were down nearly 2.5%. The Spanish were down 1.8%. Even the Russians were down 2% today. So nobody's safe, is what I'm getting at here. Asia, if you look at Japan, they were down 2%. The Chinese markets were down 1.5%. India was relatively flat but gained 0.3%. Here's the one that I want to pay attention to a little bit more closely. And we were mentioning this the other day. The South Korean market is down an additional 1% today. It is at a technical level, at least I believe it's at a technical level. It's right around 2,000 points. It's actually slightly below that at 1,998 points. And the reason I call this out is because I view the South Korean market as a leading indicator, very much akin to the Dow Jones transports, the Dow theory, looking in this case global trade. South Korea is an export powerhouse, serving much of the world, but particularly Asia, China, Japan, the Pacific Rim. If they are slowing down, to me, they are a bellwether, a barometer of global growth. So their recent performance with their equity markets, to me, is another piece of this economic puzzle that's painting the picture that we are undergoing a global slowdown. No ifs, ands, or buts about it as far as I'm concerned. The South Korean market is at this level. It's basically been sort of a double bottom right around the 2,000 mark, give or take a few points. It's done this twice. It did this last year. It did this early this year. It's right there again. If prices break below this level convincingly and stay there for a little while, I believe we're going to be in another race to the bottom. This could be very reminiscent of what we experienced in the last months of 2018. I'm not being hyperbolic. This is my analysis. Could I be wrong? Absolutely. Absolutely, I could be, because you never know what news is going to break, what headline is going to come out. But again, this is not just on the slower growth story. This is now on the escalation between South Korea and Japan. Because you had Japan just this week remove South Korea from a list, basically a Friends of Japan trading list. Well, South Korea is no longer on that list. And now, in these types of events, just like a tariff war, a trade war, what happens when one country does one thing, the other one retaliates. That's why it's called a war. If you're going to shoot at me, I'm going to shoot back at you. This shouldn't be surprising to anybody. That's why this is bad policy, and these things typically do not work. So not only do we have to contend with U.S.-China, but we have to also contend on the back burner, the sideshow, the off-Broadway musical, South Korea versus Japan. And believe me, folks, this is not pretty because of the interconnectedness of these markets. I hope you're understanding this through this podcast, how we talk about how everything is interconnected. So even if Donald Trump and company thinks it's fantastic that he is hurting China's economy and is taking credit for hurting China's economy by being tariff man, what the president ceases to understand, or doesn't seem to understand, or at least some of his advisors are not really strongly advocating him, Mr. President, if you take down China, you're probably going to take down us as well. And that's not going to be good. That's the interconnectedness of everything. Because if you take down China, you're going to take down Europe. And Europe's doing a fantastic job of doing that themselves. So you're just going to make that worse for them because China and the European Union are they're the largest trading partners. So that's not going to be pretty. The United States is not an island unto ourselves. We're not. I mean, we should have learned that from what happened in the Great Recession. I mean, that should be crystal clear to everybody. It was only 10 years ago, not that long ago. So that's why I pay attention to what's going on in Asia. That's why I'm paying attention to what's going on with the South Korean markets, because I view it as a leading indicator as to what can happen for other financial markets the world over. So again, it is at a technical level, as far as I'm concerned, around 2,000 points. If it breaks below that convincingly and stays below it convincingly, then look out. Other markets, we have the Hong Kong markets down 650 points, a decline of 2.33%. So, I mean, 1 to 2, 3% days. This is huge. This is huge. All on the back of really, well, it's a couple things. One of it is the headline news is Donald Trump escalating the trade war between the United States and China. It was only a month ago, the end of June, at the G20 meeting in Osaka, Japan, where you had the truce. So it hasn't even really been a month, or 1 month exactly, and there's escalation. And while we don't know what China is going to do, they have vowed to retaliate. Will they retaliate before September 1st? Will they wait to see if Donald Trump and company are bluffing? I do not think the president's bluffing. Like I said before, if the president was going to make claims that the Chinese were going to buy more product, agricultural product in particular, and do a whole host of other things, and then you have the data come out and China's not doing it, then Donald Trump had to act. Again, our analogy, if you're going to threaten to break somebody's legs, if they cross that line, sucks as it might be, you're going to have to break their legs. So in this case, he's threatened tariffs. China didn't follow through. Tariffs on, breaking the legs. Got to do it. You have to do it because now your credibility comes into question. So you want to box yourself into that corner. If you want to pretend the bluff and they call the bluff, you got to flip the cards. You got to take the action. And that's what the president did. And now you can expect the Chinese to retaliate in some sort of order. What it's going to be is anybody's guess, but they will retaliate. Just like we would have. Had it been reversed, had China and company placed more tariffs on us, Donald Trump most definitely would have slapped them with more tariffs as well. So again, like we were saying yesterday, do role reversal. Put yourself in the other person's shoes. Look at it from their perspective. That's all I'm saying. It's a quick exercise, and it's a very effective exercise as far as I'm concerned when you're doing any sort of analysis. Just put yourself in the other person's shoes. So we have that to contend with. Again, minor, we had the agreement between the United States and the European Union for the European Union to allow more U.S. beef to be sold into Europe. That's great news, I'm sure, for cattle ranchers and the like. So hopefully that follows through, but I think it still needs to be approved on the European front. But at least that is some sort of progress. Although the president wants to claim during his speech today, I caught a little bit of it when he was outlining this deal, that, we're taking care of our farmers like never before. Of course, we have record bankruptcies or multi-year farmer bankruptcies. We have them being subsidized to the tune of over $20 billion, and I don't think we've seen half of it yet. I think there's a lot more bailout for the farmers to come. So, we're taking care of them like never before because we're bailing them out like never before. I mean, that's not taking care of them, ladies and gentlemen. The farmers don't want to hand out. They want to farm. They want to produce. They want to do their job. Jobs report. 164,000 jobs created in the month of July, according to the Bureau of Labor Statistics. This was in line with expectations. However, when you look at the revisions for June and May, they were revised downward. Last month, everybody was shocked with the 200+ thousand jobs that were supposedly gained in the month of June, in the month of June. Not the case. It was south of 200,000, 190-some thousand jobs. Still better than expected, but well below the 220,000 number figure. So this is a continuing trend of the revisions being revised downward, which is not great. We also have other news in this jobs report where we have nearly, it might even be a record high of Americans working multiple jobs. So let me get this straight. We are somehow in the midst of the best economy in the history of the United States. We have more Americans working multiple jobs. I mean, a lot of people don't want to work one job. What makes you think in a booming economy they want to work multiple jobs? I mean, if you're in a booming economy with wages rising, then one job, if there's low inflation or no inflation, is constant. Okay? So another thing, with this low inflation, because this ties in with the Federal Reserve and some of their justification for the 25 basis point rate cut and the end of quantitative tightening. And is this another political play to impose tariffs on China from Donald Trump to get the Federal Reserve to cut interest rates? Because one of the key factors that Jay Powell said during his press conference was, well, we're in uncharted territory, but yes, the trade uncertainty is one of the reasons why we decided to cut interest rates. Well, if there's more uncertainty now and it's escalating, doesn't it make it seem like now the Federal Reserve has to cut interest rates once again? This is going to be no surprise to us if they do so, but if they do so, the next move won't be until September, okay? So we have pretty much the Federal Reserve on holiday for a month. We have Congress, which is basically on holiday every day, but is now officially on holiday through the month of August. So you're not going to get any type of monetary stimulus during the month of August. You're not going to get any type of fiscal stimulus during the month of August. There's not going to be the passage of the USMCA, NAFTA 2.0. There's not going to be some bipartisan get-together for a massive infrastructure bill spending. Not that I am advocating for these things, but nevertheless, the market will cling to hope that something can get done, and this is something that they can maybe, buy the dip and rally through the month of August. It's not going to happen. It's not going to happen. The only thing that could really happen on a positive note is if Donald Trump somehow does a 180, I'm not going to place tariffs on China, and we have a deal. I highly doubt that's going to take place over the course of this month. So we're going to lack monetary stimulus. We're going to lack fiscal stimulus. Okay? Now this is going to force the markets to pay attention to reality, pretty much like what they had to do in the final quarter of 2018, which is why I believe it is quite possible that this week and this big sell-off could be the start of more selling through the month of August, because there's just not that much hope to cling to. These job report numbers are not fantastic. In conjunction with a lot of the PMI's numbers that we've been looking at, things are rolling over, which even that is painting a contradictory picture, because when we look deeper within the PMI numbers, and when we look at the employment figures from PMI, and then you look at the manufacturing job gains in this jobs report, something's not syncing up here. I tend to believe the PMI numbers more than I do the government figures, because the government figures are always getting revised to the lower. Another point I want to call out. We continue to have a near record low unemployment rate at 3.7%, a multi-decade low, 40, 50 years, okay? This is all well and good. The president can pat himself on the back. He doesn't need my approval to do so. He's going to do that anyway. However, when you look at the graph and you look at the slope of the line, and this is going to be another video that I'm going to post to the capitalnews.com and to our YouTube channel and our other social media channels. Going to hopefully get that out this weekend. Maybe do a couple videos this weekend if I have the time, and I hope I do. Because I want you guys to see this, because the president claims that he's the jobs president. If you look at the line of this slope, or the slope of this line, I should say, there's very little change between administrations from President Obama to President Trump. So what that means is the trend was continuing. What was transpiring under the Obama administration has simply continued under the Trump administration. So there was no fantastic jobs president here. The difference is Donald Trump is a mass marketer. He's a master salesman. That's what he does. He takes to Twitter every 15 minutes to pat himself on the back and to call out these numbers when they look good for him. Barack Obama, did he do that? Not to this extent. Every president is going to pat themselves on the back and take credit for some of these numbers if they're going in the direction that makes them look good. Okay, that's no surprise here. But Donald Trump is not the jobs president just because he tweets it. Okay? It's propaganda. Again, he's just a very good salesman and is spinning it that way. All right, but that's what he does. So you're going to see that visually, that hasn't been much of a change. The other thing I want to call out is typically when you have low unemployment and you have it persist for a while, which is what we are starting to see. We're starting to see it bottom out, 3.6, 3.7%. Where can it go? It can go up. That's where it tends to go. This is the end of a business cycle. This is what happens during the process of these cycles, ladies and gentlemen. It's just what happens. It's the natural ebb and flow of economic nature, if you will. Okay? When you're so low for so long, you end up going up. You throw a ball up into the air, it's coming back down. This is just sort of economic gravity, if you will. What this tends to portend is an oncoming recession. What also you happen to see at the end of these business cycles is wages start to increase, and that is also something that we are starting to witness. So it's another number that the president and his economic team are going to pat themselves on the back for, and I understand that from the political standpoint. But that's what happens at the end of the business cycle. So now you have increased costs. What's that going to do to margins that have already peaked out? Corporate margins have peaked. Now you're going to have them have to deal with higher costs, labor costs. That's going to further squeeze margins. Right back to where we started this conversation. This ties in with the natural gas prices going down. When you start to have corporate profits getting squeezed and they have a whole bunch of debt to service, and we have trillions of dollars of debt coming due this year, next year, up until 2023, we have trillions of dollars of debt coming due. Okay? A 25 basis point cut ain't going to do it. It is not going to do it. We had our video presentation, our central banks trapped, and we talked about quantitative easing, and we showed that graphically. And if you recall from that presentation, if you have not seen it, do so on the capitalnews.com or our YouTube channel. QE3 was nothing. As serious as that was, if the Federal Reserve is really going to come in and quote-unquote rescue the financial system, they are going to have to put the pedal to the metal, along with the ECB, the Bank of Japan, and everybody else and their mother, because the laws of diminishing marginal returns have kicked in. It has kicked in. Every marginal counterfeit funny money that makes its way into the system carries less bang for the buck. There's no other way to put it. Instead of being a cheerleader for all of these numbers at the end of a business cycle, instead of taking ownership of the stock market and the economy, the President of the United States would have been much better advised to simply drain the swamp and do his best at that in trying to create and implement structural change. Because the last point I want to make here quickly, and this I have to take this back to U.S.-China, because this just popped into my head here. One of the comments that the president made was, we got to put these tariffs on China because President Xi, he's taking too long. He's moving too slowly. Weren't we told a number of times after the truce was in place that we are in no hurry now? Weren't we told that? Does the president forget? Does he not care? Is it more about, we threatened to break your legs, you didn't follow through on buying more soybeans and wheat, you're going to the Brazil, you're going to the Russians. I mean, now we got to smack you with 10% on $300 billion. What's next? So, I mean, what is it? This goes to the question of credibility. And you're in the midst of a presidential election. So the Chinese are just going to sit there and wait. They're just going to say, all right, well, is he bluffing? We'll find out September 1st. If he isn't bluffing, then we're going to retaliate. Maybe they'll retaliate before, but we'll keep you posted. Today is Friday, so go enjoy your weekend. It's been a pleasure having you as always. Please like, share, subscribe, get the word out. Continue to follow us on the Capital News, our YouTube channel, and all our social media platforms. And be aware and on the lookout for some more videos, because I do want to get more of those videos out there for you guys. So enjoy your weekend. Stay safe. Have fun. I'll catch you here next week. This is the Capital News. I am Alex Kreitis. Godspeed.